Hi, I'm Ross from Coombsmith 150 Group Property Accountants, and we're obviously going to discuss the best tax tip. I'm going to go into 4 little sub areas a bit more about it, but just to get it out there to start with, the best tax tip is really simple, really easy. It's depreciating your chattels. It is absolutely amazing how many accountants don't do it, how many people don't do it. We've been doing it for I think about 18 years or something now, as long as we've been operating, and it's a really good tip to reduce your tax. So generally it means you've bought a brand new rental property, you generally value it to do a chattels valuation for it. It costs about $400, $500. They value the carpets, the curtains, the dishwashers, stove, the heat pump, the fences, the decks, the driveways, the paths, a whole lot of different items that you can depreciate. That then reduces your tax. Obviously, with lots of interest deductions, it's getting worse and worse. People are paying more and more tax. So chattels depreciation really makes a huge difference. And it is the smartest, easiest thing that you can do for tax. I've got 4 little subtopics like I mentioned before: depreciation recovery, doing it yourself, if you just purchased it and renovating it, and commercial. So I will go through those. Depreciation recovery, generally that's a really old-fashioned term. It's around when we used to depreciate residential rental properties, which finished about 1st of April 2021. So a long time ago now, and obviously it's still relevant to commercial properties where we're depreciating buildings again. So depreciation recovery happens when you've depreciated the building down and down and down in value, but in reality it's going up and up and up in value. So you end up claiming this depreciation as a deduction, but when you sell it, you've actually gone up in value, not down, so you've wrongfully claimed it. You have to return it. No interest, no penalties. So to me, nothing wrong with that. It's just an interest-free loan. Hey, if we own the property for 20 or 30 years, that means that we're not having to pay tax on all that depreciation. Great. Have to pay it back later? Oh well, we'll get over it. So that's building depreciation, but for residential we can't depreciate buildings. Like I said, that stopped way back in 2011. I think I said 21 before. It stopped in 2011. Now we've just got chattels depreciation. Your carpets, your curtains, your dishwasher, your stove, they all wear out. You're very, very unlikely to get any depreciation recovery. Very unlikely, just about impossible that those items are going to go up in value. So one of the great things about chattels depreciation is you get the higher depreciation and you get to keep it. So that's point 1. Point 2, doing it yourself. Look down at the carpet. Maybe you're in an older house. I'm sitting in my office. What does that carpet cost as part of your purchase price? You've got me bamboozled. I don't have a clue what that carpet is worth. Even if we put it in new 5 years ago or something, it's still difficult to work out what that cost is now within the purchase price. So generally, to me, trying to value things yourself, you've got to do it for tax purposes. You've got to do it based on the cost of the property, not what that chattel is worth. It's what it's worth as part of that purchase price. So if you bought the whole property for a 50% discount, all your things could be discounted. To me, too hard. I would just get Valueit to do it, and Valueit is the only firm I would use. I'll put their their website in the comments. We have no affiliations. I get no kickbacks. I don't own a half or anything like that. It is just the best firm out. It's the only one who knows what they're doing. Point 3, if you've just purchased and renovated it, we see the odd silly person who goes, okay, I've bought it, I've got no tenant, I then do a big renovation, I'll get a chattels valuation at the start, I'll write off all those items. Well, if you don't have a tenant, you won't be able to get that deduction. That's completely wrong. If you did tenant it for a while, then you could potentially do that, but obviously those chattels are not likely to be worth a lot. So generally, if you're buying and renovating, you won't get a chattels valuation done. Instead, when you buy your carpet and get it installed, that will be your cost. Note carpet and installation. When you get some curtains, that will be your cost, and that's what you'll depreciate for. Same with your stoves, heat pumps, fences, decks, all those sort of things. So generally, if you're doing a major renovation, you'll then use the cost price. So you won't need to get Valueit in. And last one, commercial. Commercial is the dream come true. We can obviously depreciate buildings, which is great, get a little bit of depreciation there, but we can depreciate everything. We can depreciate the non-load bearing walls. This is probably actually load bearing because it's concrete, but internal partitions you can actually depreciate. Electrical fit out, plumbing you can depreciate. So there's a whole lot more items that we can depreciate. Commercial is awesome. It's even more worthwhile than residential. So hopefully you've enjoyed that. Just have a look on the links we'll put below. On my link tree, we've got 5 awesome webinars coming up. One of the best ones is, they're all great obviously, but one of the best ones is what happens if you've owned rentals for a while, got some really good equity, but not getting the cash you want. Just giving you a few different ideas and even looking at the dark side non-property things. So just trying to give some good information, good comparison. All 5 are free, and another one's about property. How do you add value? What things can you do to add value, add rent, do other parts? So hopefully you've enjoyed that. Hopefully you've got some good information. And yeah, just a little thing, if you're struggling with interest rates at the moment, I'll put in the free chat to our mortgage brokers as well. Thanks a lot for your time. Bye.